Let's catch up with what's going on with things micro and macro, and given that recent batch of data, particularly out of the States, and also ahead today with we've had Aussie wages, we'll get jobs numbers today as well. Pete McGuire joining us from XM. Hey Peter, good to catch up with you on this Thursday morning. Just let's start with what we're seeing on equity markets at the moment, because we did see that broad-based rally over the past couple of days. Looks as though we've ground to a halt this morning locally.
Well, yeah, probably locally. And, Andrew, I still think that probably there's I won't be surprised to see maybe a little bit more uplift tomorrow and today, later in the day. That number coming out as far as the US, it was still positive. And let's just see where the first half hour settles down. We've got those numbers, as you said, being delivered. So we'll just have to absorb those. And I think, the numbers will speak the data, and the data will determine direction.
All right, well, let's get into some of the data. Of course, we did see that wages data, which did send some shivers down the spine of a number of, I guess, economists thinking, well, further signs there of that strength we're seeing in the labour market. I mean, particularly we've had that the lift of the minimum wage, that's feeding into it as well. Although when you pull back, Peter, is it as bad as it looks? I guess also you've got to factor in immigration at this rate as well.
Well, exactly right, Andrew. I mean, that's a very large consideration of it all. And when you're looking at that graph, it just tells you, I mean, people are wanting a wage rise quite simply because of the cost of living, and they're still, I believe, behind the curve in a lot of ways. And the employment, we're still doing fairly well. It might tick up to around about 3.7 from 3.6, but jobs growth is expecting 20,000 in October. So the overall mood, I think, is going to be, reasonably okay. And that may be not what the RBA are after, but we've just got to, the market is the market, Andrew, and we can't do anything other than, look at the numbers and appreciate them.
What are we expecting jobs-wise, do you think, Pete?
I think around that 20,000 was previously around 6,000 from previous, but I think it'll be probably around that sort of number. So that's what our team are putting together, and I'll look at their numbers and the reports, and I've got to hang my hat on that. But hey, we could be out. I mean, have a look how hard it is to forecast and how many people get the NFP right, non-farm payrolls. So it's you can be out by 100%. So let's just see when they drop, and naturally the Aussie dollar will be probably on a bit of a roller coaster. So it could be a chance for a move to the upside. We've just got to see how that all materialises.
Yeah, as I mentioned there earlier, we did see that bounce in the Aussie over the past couple of days. So do you think we're past those lows?
I think so. I won't be surprised that US dollar's come under a bit more pressure to the downside. So, it's sitting at 104.37 for the US dollar index, well off the, 106 handle. And the Aussies had a nice lift up, Andrew, sitting at, 65.07, 65.10 at the moment. And I won't be surprised to see a little bit more uplift. So, again, it's a hot market to trade the old Aussie, and it never disappoints.
So, Peter, when you're considering the data at the moment, and of course the RBA is saying it is data dependent.
Yes.
So a question of what they're going to do next, and I guess the next key set of data beyond what we're seeing today, of course, with jobs, is inflation, CPI due at the end of the month. So what's your expectation? What do you think's driving inflation at the moment, and whether there is a risk they could go again?
Well, that'll be on the 29th, and I've just made some notes here, the biggest market mover, and certainly that surprise to the upside last read was 5.6%. So if it surprises again, then that's going to be, I think, ammunition for possibly our RBA governor to maybe have another ratchet up. We've just got to see how that is all interpreted. Fuel, energy prices, food, and of course, one can't get their mind away as far as a big input to inflation is naturally rent that people are paying on properties, and there's a real shortage. So this is another part of it. So we've just got to see again those inputs and how that materialises across the framework of inflation and the read. And we're in the hands of the data, and we're in the hands of the governor in a lot of ways.
Yeah, absolutely. Meanwhile, in Japan, Pete, interesting story, isn't it? Because the yen remaining under extreme pressure. And I guess it once again comes back to those interest rate differentials, doesn't it? Given they're so low. in Japan. So what's the expectation just as far as possible intervention from the BOJ is concerned?
Well, a couple of things, Andrew. First off, we're at nearly a 30-year low, nearly touched it this week as far as the yen versus US dollar. It's lost about 13% year to date. So in the first 10 months, it's not a bad loss, is it? You know, if you were just short the yen against the Aussie or against the US dollar, it would have been showtime. So there's that side of it. The BOJ has refused to raise rates, even as foreign central banks like the Fed naturally have ratcheted them up well above 5% for many central banks. So that's globally. And higher energy costs have denied the yen, which is a great thing, Andrew. That's the challenge, their trade surplus, which they've historically enjoyed. So they import most of their energy. And Finance Minister Suzuki recently said government will take all possible steps necessary to respond to currency moves. So are they going to intervene at 152 or is it 155 the new handle? We've just got to wait and see how that all goes. But I think, tossing a coin in the air, I think it's probably closer to the 155 handle.
All right, we shall wait and see. Pete, commodity-wise, oil did come off again overnight. Some concerns there about weakening demand in Asia, but also rising stockpiles in the States.
Yeah, I looked at that EIA report and I'm conscious of it. I still look at the OPEC plus. So everyone has differing data, and the panels that I sit on, it's always intriguing to listen to someone from the Middle East versus someone from Africa or Venezuela or Asia. But if I look at it, yeah, it's choppy. There's no doubting that. It's up and down a couple of percent, and so that is a delight for traders. The overall theme, 76, 70 roughly for WTI. Brent's sitting at just over 81. Probably have a little bit, maybe another dollar up, and it'll just oscillate, and it seems to be very much in that channel. So until we get some breakout news, it's a market that's really not offering a great deal of those explosive moves, both bullish or bearish, Andrew.
And Pete, gold, we did see it to move higher when the US dollar, those yields came off. They've gone the other direction overnight. It's trying to threaten that $2,000 level, isn't it?
Well, your famous phrase, kissing it. It's a distant kiss at the moment at 1965, but I still think those. We saw what happened with yields overnight. It's still, it's only $35 shy. Silver had a little bit of a rally also. It's at best part of 23.5. So yeah, I still say it's probably its best days are very much ahead of it till the end of the year. Let's just see where it all rolls. But if that US dollar comes under a little bit further pressure to the downside, Andrew, then that could be, a more momentum or a catalyst to drive gold higher.
And while we're at it, digital gold, Bitcoin, gee whiz,
Yeah.
it was almost breached 38,000. It has come back from that, though. Also, Ethereum doing well at the same time.
Absolutely, up 6%. It was a big move, 37,750. So, you can't get away from it, as we've discussed. 120% plus up for the year, and a big push up. Nearly 40% now to be approaching that 35 to high 30% up since October 1. So, yeah, that's a market that's certainly very dynamic, and it's offering great opportunities for traders.